Hey everybody, welcome to the morning market briefing. It is Tuesday, March 1st, 2022, new month, but the same old topic as we continue to kind of digest the conflict that is going on in Europe. We will catch you up kind of on the day that just passed yesterday. Futures are down. Market was down a little bit yesterday. Rallied a decent amount. At one brief moment was actually up. Right now we're looking ahead. Dow futures are down 69 basis points. S&P futures down 64. NASDAQ down 63. So red pretty much across the war. Ben, give us a little bit of a state of play as things currently stand. Where are we? What's it looking like as this conflict continues to drag on? I think at this point, I mean, it's hard to say drags on. We're inside of a week, but again, as we touched on yesterday, a little bit of a tonal difference from what we saw maybe Thursday and Friday of last week.
Yeah, in terms of the status of the war right now, the Russians are really emphasizing the two cities now, going after Kharkiv in the east and then Kyiv in the really a central location, about 70 miles south of the Belarus border. I'm just seeing updates right now where the 40-mile long Russian convoy is now basically on the outskirts of the city in Kyiv, and that'll be something that's going to be probably quite sad to watch how that unfolds, quite frankly, and the images are not going to be nice to see from that. Kharkiv over the last 12 hours has been brutally shelled. President Zelensky said that the attacks on Kharkiv are state terrorism that are committed by Russia. He wants them to be tried for war crimes. They've bombed out the state administration building and kind of the towns in the city square that was kind of reduced to rubble. Meanwhile, on the Belarus side, you have President Lukashenko, who has really offered Putin some shelter and passage, and he says that he's actually encouraged by talks between Ukraine and Russia, although for Zelensky's part, and quite reasonably, Zelensky says that after analyzing the results of the talks between the Russian and Ukraine delegations at the Belarus border yesterday, he says there can be fair negotiations if one side does not hit the other side with rocket artillery at the time of negotiation. So basically saying, Lukashenko, it's good that we're having talks, but it's not really consequential when they're bombing out Ukrainian cities. Russia, for its part, says that it is not targeting civilian infrastructure, which appears to be patently false. And right now, the Ukrainian priorities are pretty clear. Number one is they want to protect Kyiv. Number two is that they want to ensure the safety of the atomic energy plants. You have the International Atomic Energy Agency. They're on high alert because as the Ukrainians are forced to abandon some of these nuclear power plants, you do have the risk of meltdowns. And Europe's largest nuclear plant is located in Ukraine. So that's something to watch as well for a country that has housed Chernobyl in the past. As far as sanctions go, the SWIFT messaging system is still up. It hasn't been disconnected, but will be disconnected once legal instructions are received. And this would be disconnecting certain Russian institutions. Russia, for its part, has tried to hit back. They've basically said, do not fly over our airspace. And also, you're not going to be able, if you have investments in Russia, you're not going to be able to take those out. So again, that's a big reminder for us. Do not invest in countries run by dictators, even if it's an opportunity, because there is a great chance that you will be trapped, frozen, indefinitely suspended from trading and actually accessing those assets. And that probably goes for China as well. So that's kind of where we stand on the situation in Russia.
Tom, I want to get your thoughts at a high level, but you had a wild factoid yesterday about the Russian stock market and closures in the past. I feel like people would be pretty entertained by that.
Yeah, I saw this stat and it was pretty wild. So yesterday, the Russian stock market was closed for the first time since 1917. But when the stock market closed in 1917, it did not reopen until 1992. So an interesting precedent. That was the Bolshevik Revolution. We lost capitalism as a concept in Russia for the next 75 years. So a pretty big day for the Russian stock market to be closed. Historically speaking, that causes a worldwide shift in the landscape. So last time Russia basically became the first major communist power, and then this time we've got basically the brink of World War III, assuming that things don't stay contained in Ukraine. But it's definitely an interesting development. But it was wild because obviously as soon as I saw that, I started walking around and be like, so last time it closed 1917, how long do you think it was until they reopened? And it was like 6 months, a year, 3 months. But yeah, it was 75 years. They reopened after the fall of the Soviet Union in 1992, which is pretty wild to think about.
Yeah, it's a crazy scenario. I would very much echo Ben's sentiment. I think the massive convoy that I think was initially reported, I forget the numbers that I first saw when they first started talking about it. It seemed like here comes a possible doomsday scenario for Ukraine, and then it came out that the reporting was actually inaccurate. It was much, much longer, the convoy coming from Russia. It's going to be quite interesting, I think, to see what comes out of this. I mean, I do wonder if some of this, Putin recognizes Zelensky as legitimate president. Ukraine is trying to join the European Union, which really doesn't mean much from a militaristic standpoint. There's no real plan for the two top dogs from these countries to talk. I do wonder if part of Putin's plan is to essentially surround Kyiv and create pressure on Zelensky for a conversation. I mean, I don't know, Ben, I don't know if you or Tom have any thoughts, or if they'd rather just, the capital city. I mean, there's, to an extent, you wonder if even Russia, if they're trying to take over the country, you may want to still have some infrastructure in place when you do so. But I don't know if you guys have any thoughts on what the angle is once they presumably surround the city.
I agree with that, Andrew. I think that the forces that Russia has ready to go there would not be enough to hold Ukraine. At least that's what I've understood to be the case. And so you do need a government in there. And I think Putin saying that he does view Zelensky as a legitimate Ukraine president is supportive of that. And for the West, is very important. And I was having a conversation about this with a former colleague yesterday, and that is you need to give Putin an off-ramp. Because if you do not give Putin an off-ramp, then you do not want to back him into a corner, because he will lash out, and that would get very ugly. So I think that'll be the case, and but it's going to get worse before it gets better, in my opinion.
Yeah, and then economically, we've talked about this at length, but I mean, just multiple angles in which this is going to impact inflation. I think everybody understands the oil and natural gas components of this. We touched on this a little bit yesterday, but the number one supplier of fertilizer to Europe is Russia. The number one supplier of wheat to the European Union is Ukraine. Number two supplier of wheat is Russia. This is not just isolated to energy. Ben, how prepared do you think Europe is to kind of bear the weight of these consequences? I mean, I think it's one thing for leaders to get up there and say, hey, we've got to shoulder some of this responsibility tied to the sanctions. And some of this isn't even tied to sanctions. Some of this is you have two countries in conflict.
Yeah, I think part of it's going to be subsidies or reductions in taxes for some of the people in Europe on these commodities. But then also it's just going to be borne by everyone. It's going to be a societal cost. Sometimes it's a societal cost for committing military to conflict like this. This time it's going to be a societal cost in terms of economics, and it's going to come in the form of inflation, which will drag down real good growth of the economy, especially in Europe, but even here in the United States as well.
Good deal. Switching gears a little bit, I feel like we've gotten a lot of bad news out to start the call. Target got their earnings conference call at 9 a.m., but they have reported results. Seems like a pretty stellar quarter across the board. Stocks up quite a bit, double digits in pre-market trading. Earnings per share came in at $3.19. Expectation was for $2.88. Gross margin was a little bit higher. We talk about that a lot when we talk about retailers. The margin story can be very, very meaningful. EBITDA came in well above expectation, operating margin above expectation. Ben, how do you read Target's quarter, and what stood out to you in terms of the market reaction relative to the actual numbers?
Yeah, I thought the quarter was fine. I think that the guidance was what really did it, and especially the guidance on the margin side for Target. You have a lot of other retailers who are really getting hit on their margin, but Target's actually holding up fairly strong. And I think that just shows the loyalty of the Target customer, as well as the improvements they've made in the supply chain over the last few years. And I think that those benefits, as the company's management team has really executed, Tom and I were talking about this before the call, management team has really executed on both the operational side, really improving the supply chain, and really on the marketing side as well, making it a place that consumers want to shop and therefore having greater power over those buyers because they offer something a little bit different than maybe going to Walmart would.
Yep. I think you're totally right. I don't know, we've talked, I feel like, a lot on the call and in meetings and on macros about just kind of the many trends that COVID accelerated. I think Target's been one of those stories where we've really looked at management, even going back prior to the pandemic, to look at what could happen if they execute the way we think we could see them execute. And we've really seen them do well coming out of that. And I think that anytime you see margin guidance the way we're seeing it, a lot of that comes back to management and the shopping experience they're creating. Tom, I want to throw to you a little bit to talk about Powell's testimony today and what we're seeing in bond world. What you got?
I think we're seeing an unwinding of the panic involved with lots and lots of rate hikes and the potential for higher rates. I think that over the last couple of days, just with everything going on with Russia, we've seen futures tick down in terms of the number of rate hikes we're going to see. And I think with growth expectations slowing and inflation being driven primarily by exogenous events and not by demand, the Fed is not going to be ultra aggressive, is my expectation. And so what we've seen is actually kind of what we talked about a lot over the last couple of months, is that when you talk about raising rates, there's a panic, everybody starts moving out of bonds. And then what we've seen over the last couple of days, as we approach the date of an actual hike, we're seeing steepness. We're seeing the short end of the curve, which is going to be affected most by a rate hike, start to fall. We saw a precipitous decline in the 2-year Treasury. It's fallen almost 20 basis points just in the last 2 days, which is a massive, massive move. I mean, that basically cuts out an entire rate hike in terms of the move that we've seen. And that's just beneficial for everybody. I mean, it's unusual that when rates rise, the shortest duration, most interest rate robust bonds are the ones that are selling off the most. That's an unusual move. And so we're seeing that unwind a little bit, which is very beneficial for client portfolios. It's going to be better going forward if we have steepness in the curve rather than an ultra flat curve. It is a more realistic situation for bonds. So that's what we're seeing. And I'm personally very pleased to see that, because that was my expectation. I've been hoping we'd see it sooner rather than later. We're starting to see it now. We're starting to see a little bit of just normal level-headed thinking moving back into the bond market, which makes things easier to navigate, because it's very difficult to trade bonds, generally speaking. But when the market is moving in an irrational manner, it makes it even more difficult to discern where the value is. And so now that we're kind of getting back into a level-head space, it feels a little more comfortable for me, and we should see that filter through into client accounts over the next couple of days as prices reset.
Good deal. Thanks, Tom. We're going to wrap up by previewing the State of the Union. One story just to hit relatively quickly before that. Chevron had Investor Day. They've announced that they're really kind of following this trend of just putting cash back into shareholders' hands. So they're increasing the share buyback program from a range of $3 billion to $5 billion up to a range of $5 billion to $10 billion. They're going to cap their capital spending at about half of what they usually are high in the cycle. They're going to cap it at $17 billion a year through 2026. They expect operating cash flow per share to grow 10% a year. I think the big takeaway here, and it may be more a reflection of the political and economic environment, is Chevron, which has certainly benefited from relatively high oil prices, has made it very, very clear that their priority is really returning cash to shareholders rather than investing in more production. That's just not what's in the cards at this moment. So an interesting timed event, given the things we've been talking about in Europe and the concerns we have about oil prices, et cetera. But an interesting move by them. The markets responded relatively favorably. Stock was up a good bit yesterday. Stock's up a little bit pre-market today. So something to kind of keep an eye on in terms of how the market digests that. Ben, we do have the State of the Union tonight. Curious your thoughts on what the tone is going to be. I would imagine this is a speech that has been written in large part for some time, but has had to be revised quite a bit over the last week. What do you think the high points will be in terms of what Biden wants to get across in messaging to the country?
I think it'll be conciliatory to the issues that are facing people today. And I think it will try to demonstrate Biden's leadership in a few ways. First of all, and really strategically building consensus. If you look at the infrastructure bill, I think he'll talk about how he was able to get a bipartisan infrastructure bill done. If you look at Ukraine, I think he'll talk about how he was able to coalesce the West and how there's now a more united front than maybe before. I do think that then he will discuss issues like inflation. I think that some of that will be blamed on supply chain. I think that some of that will be blamed on the oil prices as a result of the conflict in Ukraine. And then he'll also probably talk about COVID and the mass planning that they did there and the progress that's been made over the last month or so, trying to demonstrate that we've made it through the worst of COVID, CDC relaxing rules and recommendations, et cetera. And then finally, he'll also probably talk about the nomination of Ketanji Brown Jackson to the Supreme Court and the progress there. So I think he'll probably try to cut a contrast with President Trump. And really that revolves around kind of the Supreme Court nominations, COVID, as well as building consensus on some of these issues like Ukraine and infrastructure.
Good deal. We will. We're going to wrap it up there. We'll have lots to talk about tomorrow, not only on the State of the Union, but also update on Russia-Ukraine conflict and state of the markets. We will talk to you guys tomorrow morning at 8:30.